Hey, it's Soleil, and this is episode 190. What the hell is it? 197 of the Orange Pill Investor. And it's Friday, so it's roll day. And it's funny. I'll- There's been a couple of YouTubers giving me a little bit of grief for using Robinhood. And it is, I guess, considered a little bit of a rookie platform. But and I do actually hold a little bit of a grudge when they halted trading on GameStop back in the day. I kind of considered never using them again. But but when I first got started, I didn't have a lot of trading money. I actually had quite a bit of loyalty to Robinhood because trading with no fees was huge. I think I had an E-Trade account or something. They wanted like $8 a trade, and I was trying to do dumb shit like trade these penny stocks. And if you place $100 trade and $8 of it is stolen with these ridiculous fees, um, you know, back in the day, Robinhood was just really great. I have moved most of my dollars over to Tasty Trade because I owe them some loyalty too for having watched hundreds, maybe thousands of hours of option research content. So I don't mind paying them a fee. I think for if you, I think it's like $1 an option contract or something, which isn't too bad when you're getting paid $500 or $1,000 in premium. But if you're trying to trade a Riot and you're only going to collect 10, $15, paying $1 is huge. So I totally understand why people don't want to pay money to trade on certain platforms. I consider it basically just a tip, um, just out of sheer loyalty to Tasty Trade. I know I am not maximizing my returns by paying those dollars here and there, but like Robinhood is just great for beginners. So I know people who've been around the block or whatever, they want to clown on Robinhood, but the user interface is pretty good. I mean, even just the fact that the damn options chain is right side up. So if you're old school, you're used to seeing the option chain like this, and I could never understand why it was this way. But up is down and down is up, and it doesn't make any friggin' sense. Is just I'm just guessing, but I'm assuming some asshole programmer that doesn't trade stocks did this the first time and was like, "Oh yeah, okay, well, you know, down can be bigger, I guess." Like if you were going numbers and you're like, "Okay, 1 and then on the next line 2, I guess this makes sense to go from lower to high." But for anyone who's not an egghead programmer, it just makes sense that bigger numbers should go up and little numbers should go down. And their tools are even getting pretty sophisticated. So I showed a put credit spread the other day, and I'm not actually going to set this up, but this is just for fun. They got these cool graphs here. I mean, this is going to show you, if I sell this, I'm going to get paid what, 85, right? So my max profit is going to be that whole entire, no, it says unlimited, but my max profit is going to be the 85, and then my max loss, is down here, and here's my break even at at 120, but I got paid $1.85, so really I can go from 18 to 20, and still, like, this little gap here, I'm making a little bit of money. And then here's like, okay, I lost a little bit of money, but then once the price gets below that 115, I lose all the money. So these little tools, I mean, Robinhood is getting better. And then, what if I added this, and now I can get some weird cool shapes? I mean, you can just really graph this shit out. So Robinhood like doesn't suck as bad as some of the elitist snobs would have you believe, but I am probably damaging my reputation by even using this at all. But I did feel like it was kind of appropriate to do my 5K challenge in a Robinhood account because that's probably where a lot of people are doing their 5K challenges for the first time. So anyway, and now I kind of I start out with my I do two things. I start every video on MicroStrategy, and then regardless of whether it's red or green, I just scroll out until it's green. But I do it on Robinhood almost to spite these fuckers that that are giving me grief about, trading with Robinhood. But anyway, that's enough of that. It's frickin' roll day. Let's go. All right, main account. I did go ahead and do a little bit of activity because Tesla was up to 219 earlier, and I had one eye on it, and I was like, okay, I cannot keep my eye off Tesla moving up. And a lot of times, I don't know if this is just some kind of psychological thing. This is totally not based in science. But if you've been trading for a while, you'll notice that when something goes meaningfully above a round number, it'll kind of go up to that next round number. So when Tesla was pushing to 219, I was like, oh, okay. It went from 210 to 219, and there's a chance it could bounce off of 220. So when it was at 219, I sold a few of my long calls for profit. I'm not terribly comfortable with the amount of buying power I have. So as MicroStrategy's been kind of languishing and kind of shit in the bed lately, down from, this is pre-split numbers, but down from 2,000 and then down from 1,700 and then down from 1,500. My buying power in this margin account has been getting squeezed. So if MicroStrategy decided to take a dump to 1,000, excuse me, let me go to post-split numbers now. If it takes a crap down to 100, my buying power here would be completely wrecked, and I could get close to a margin call. So the point of buying these long calls, I know some people buy long calls because they hope that it just really, really, really rips and they're going to exercise. But I guess 2 years from now, if these long Tesla calls, if Tesla's worth 1,000 or 1,500 or 2,000 or whatever, then I could potentially see exercising these bad boys. But for the most part, for me, I buy calls to sell calls. I buy calls when I think they're cheap, and then I'll sell them when they're expensive. And so there were a couple here that I had, and I think I sold one of these. Yeah, I sold 4 of the 490s at whatever expiration date this is. I don't have my glasses, so I can't see it. Just to give myself a little bit of breathing room here. And Tesla's the only other ticker that I really believe in besides MicroStrategy over the long haul. But there's no telling what Tesla will do between now and next year when I'm expecting MicroStrategy to be pumping out to bejesus. So I like this Tesla position, number one, because I like the company, its prospects. I'm bullish on them, but I also did it to appease the algorithm because when I had like 95% MicroStrategy here, they just wouldn't let me buy anymore. They're like, no, this is too high of a concentration risk. And when I tried to, I tried to buy like another 10, 20, 30 shares of MicroStrategy when it was on a dip, they're like, nah, you can't have it. So just to make the algorithm happy, I'm bullish on this anyway. But the other cool thing that I think it's cool, think about having these two tickers, at least having something here besides MicroStrategy and something that's not correlated to MicroStrategy or correlated to Bitcoin, so I can kind of use them as a trading pair. So Tesla was up, and I could make a little bit of profit on some of these long calls that I sold. So um, I went ahead and took some profits here, and then it gives me a little bit of breathing room in case MicroStrategy has a nice dip. And the cool part is that now that the price has retraced to 214, I actually sold the leaps for profit, and I was anticipating having to cover paying to roll these. These were like seven, eight, $900. I think they were 900. So I got paid 200, and I was gonna have to buy them back for 9, and for 5 of them was gonna be like, yeah, like $3,500. So I was using these long calls to pay for rolling the short ones, but now I only have to pay $400 a pop because the price has come back down. So I got a little bit lucky with that. So since I'm talking about Tesla, I might as well just do it. So I'm gonna close all 5 of these. I'm gonna pay, maybe not try to pay full price. Let's pay, let's try to pay the mid price. I could get lucky, right? Sun shines on a dog's ass once in a while, but not today. All right, so they want to squeeze me for that nickel. Oh, and I might be chasing the price. This might not even fill. I did turn the desktop volume down. One of the guys complained that I made him deaf because the fill alert sound was like way louder than me talking. So hopefully that poor bastard does not go deaf. I think that was better. That was at least on my end. That was not very. That wasn't a very loud fill sound. All right, so got those closed. Now I've got 5 covered calls that I can sell for next week. Short and call. Boom. If I try to collect 1% of Tesla's value, that's going to be about $2. So that's right about here. The distance between 214 and 225, let's just say $10. And that is about 4.5%. Yeah, if the price was exactly 200, that'd be 5% ROI. So that is pretty reasonable. Yeah, 1%. Yeah, 1% would be just over 2. And this is 5 times that. All right, so I like this. Let's do 5 of these. And I'm not really going to count that as profit because I did have to pay 1,000 to roll them. So I basically, oh, actually, yeah. So I got paid 200 originally. I got paid 200 to set up the new one, and I had to pay 400. So I basically broke even on this. So this is just a wash, and that's completely fine. I did make a little bit of money on the long calls, and that paid for the roll too. All right, MicroStrategy. This is the one that I'm definitely playing with fire here because I sold at the money calls last week, and the price was, breaching those strikes by like $4 4 or $5 a share. So I was looking at maybe having to buy these back. And I think the thing that some people don't realize is that I'm always hoping that my strikes get breached. I I want my long calls to go up in value more than this. So I am definitely not afraid of. I got 20 of these. Okay. Of having my strikes breached. I'm more than happy for that to happen because if it does, I'll just be selling off a bunch of these leaps. I'd be more than happy for these to be worth more than they than they are right now. All right, so that did not fill. All right. I have 20 of those and I have one. So with the premium, I had 2,000 shares last week. I sold 20 covered calls. That gave me enough premium to buy another 100 shares. Then I sold another covered call. That's what I call reaching critical mass. And that's why I do this in the first place. I'm selling short so that I can buy more shares and or buy leaps and go longer. And so with that extra covered call, I sold a little bit out of the money. So I'll be able to keep all $134 basically of that. And let's try this again. If I sell 21 basically at the money covered calls, what is that going to get me? 11 grand and 100 shares of MicroStrategy. I can almost get them. However, with the 8 grand, I think that I got for Tesla, I can probably buy another 100 shares of MicroStrategy. Or should I sell a put? Will that be fun? I can just basically start the wheel. Mm, sure, why not? All right. Step one of the wheel. I sold a put in MicroStrategy at the 128. If the price is under 128 next week, I'll get assigned another 100 shares. And I should take this 500 bucks and put it to good use. So let's go out to, I think it's 60 days. So that one is going to cost me 400. If I got to 244 days, can I get, nope, that's way more than 500 bucks. All right. So let me go out to February 21st. I'm going to buy another call. Try not to pay full price. All right. So I kind of dollar cost averaged into this a little bit. Now I have 21. You can see I lost a little bit on this. So my original trade price is 664. They're only worth about 375 right now. So that's why this stuff is why I would be more than happy for MicroStrategy, even though I have these covered calls set at, what did I just get a partial fill for? Oh, all of my, what the hell is this? Oh, these are my covered calls. They didn't all fill. 20 of my 21 covered calls filled. Right? Okay. Let's try this again. Try to get the other one to fill. I guess the price was dropping on me. So let's try to get 510. No, 510 ain't gonna work. I did get a complaint or two that my voice was too low, and I do know that sometimes I trail off. I need to be mindful of that. So you guys can let me know if I'm too quiet. All right, that should cover it. So I got all 21 of my covered calls set. I sold an additional put, and with that premium, with the premium from the 21 that I sold, I sold a put MicroStrategy, and then I took that $500 and bought a long call. So I am happy with that. Let's take a look and see what else I have here. So this was a put credit spread that I put together when the price of MicroStrategy might have been like was it 160, 170? So I only have 14 days left on this for MicroStrategy to go above 150 and for me to try to win this. So that would be nice as well, but this is only worth like $1,000. So worst case scenario is I lose that whole 1,000. No big deal. I did set up some more put credit spreads here. These when the price had dropped, so these are 119 and 120. Still on track to win these unless the price shits the bed a good bit. You can see I have 70 long calls out to 90 days. And 90 days is when I do not like to carry. Man, it would have been nice if I had taken a look at these when MicroStrategy was 135 or whatever the hell it was. I probably could have sold these for quite a bit more than now. But it looks like I'm going to take about a $330 loss for each one of these. So all 70 of them. And I'm going to close them because I don't like how much these decay. Under 90 days. All right, I'll take 69. There we go. See if they all filled. Yep, they gone. So that gave me about an extra 5,000 in buying power as well. So if I take that 5 grand, I guess I didn't need to buy those ones at 180 days. Since I got this 5 grand, I could probably afford some that out a little farther. So let's see how far I can go out. I've got some in February that's at 190. Let's see if I can afford the ones that are, yeah, I can afford those. December is kind of like perfect. I got paid 5 grand for those. So if I do 2, that's not quite spending the whole 4, but I can keep a little bit more buying power here. Is that everything? These I will just probably let die. This put credit spread. Hopefully this put credit spread will be amount to something. And with the price of MicroStrategy being down, I wonder if I should just set up another one. So if I go out to, the closest I can do is 45 days. So if I go to around 82% chance out of the money, oops. So I'm going to sell the more expensive leg and I'm going to buy the cheaper leg. That would only get me about $66 in credits. Divided by 5, it's going to be about 12 or 13 bucks. So that's not the greatest in premium. Let's slide this up. I can get 84 bucks here. Yeah, this is all just kind of break even stuff. The only reason I would do this probably is if just for the simple fact of being bullish. But I'm probably not even gonna be able to collect 78. I'd probably only be able to collect like 70, 72 in order to get a fill. So I'm not even gonna bother with this. All right, so I got 21 of these long calls. I've got 13 of these long calls. That's about 600 delta long. That's about 300 delta for each 1,000. That's probably okay. But let's maybe add one more long call here just to be safe. Well, for half of that price, I could do two of the ones in February. Let's do three and make it an even number. I think I have 21. Delta on this is 0.11. So let's take a look now and see. All right, so I got 270 delta, and so that puts me over 700. 270 and 440, 7 something. All right, so that gives me about 350 delta per 1,000. I like that a little better. All right, IRA account. I gotta try and remember all the frickin' different strategies that I did. So I know I sold off a couple hundred shares and I set up some poor man's covered calls. So I got 300 shares with three basically traditional weekly covered calls. So let's close these for profit. Do not have sufficient buying power. Of course I don't. Never keep any freaking buying power in this account. All right, let's sell off all my Riot and see if that gives me enough. Wait, how many shares do I have? 28. I might want to keep just at least enough money so that I don't have to go through this rigmarole every week. But I can't stand seeing cash in my IRA. Kind of pisses me off. All right, they're going to make me pay a few more dollars for this. There we go. Let the market makers know I'm trying to make a video here. All right, and then on the long calls, I actually sold, let's see, I have 4 of these. And I sold these 42. They're 42 days to expiration now. I think they were closer to 45. So there's nothing really for me to do here except wait for the a couple of weeks to go by, and then hopefully I'll be able to buy these for 6 or less, and I'll be able to buy these for 3 or less. I could put the limit orders in there, but I kind of want to watch it. And then I have these long calls for upside, unlimited upside. All right. So the covered calls, if I want to sell these for 1 week out, I'm going to sell 3. Am I going to continue the selling them at the money? Yeah, let's do that. All right, I'm going to sell 3. All right, no fill. Oh, got fills. Collected $1,500 for those. So let's see how many long calls I can get with $1,500. I can't quite get one out here. So let's take a look. Wait, did they add? I think they just added these Aprils. Why did I not see April when I was looking at my main account? Well, I still can't afford them anyway. February it is. Or do I buy actual shares? Think about this for a second. I got 3 of these worth 3 something. And I got 3 of these worth almost 2. So that's 6 grand, 7 grand, 8,700. That's still not enough to buy 100 shares. So let me just keep buying leaps. What is this? What's happening here? All right, 180 days. How many of these can I get? I can get 5 or 6. 5. Maybe not even 5. Nope, not quite. 4. And then with my last $200, how many shares of Riot can I get? Let's just do, let's see, 4 times 832. Let's just do 30. Leave myself a little bit of cash just in case that's enough for me to roll next week. All right. I have 300 shares. I sold at the money covered calls. Then I took that money and I bought even more long calls. I still have my 42 days to expiration. Why do I have one at 140? Why does it look like I have oh yeah, because I have one. Got it. I got these three. I got this one. All right, I got 4 poor man's covered calls with 4. There we go. Got myself a little confused for a second there. That's it for the IRA. Let's take a look at the joint account. So this is the one that I decided to try to do I basically Frankenstein the MSTY strategy. And I basically sold a very, very tight strangle. So this was pretty dangerous. Um, but I did compensate for the at the money covered call with a bunch of long calls. So we'll see how this turned out. It's going to cost me, since this put went to hell, if I want to continue selling strangles, that means I got to pay to roll this. I'll roll it out to 823. And if I roll down to at the money again, that's going to cost me 400 bucks, maybe a little more. And then the covered call actually was fine. You can buy that for very little. And the question is, do I want to do it again? So I just sold an at the money put. Do I want to sell another short call? Not buy, sell. If I do, I've got another 500 bucks. That means I can buy another long call. Is that worth doing? Or should I just continue to sell puts every week? And pad my stats. Yeah, I think I'm taking a little bit. I'm capping my upside maybe a little bit too much, selling too many covered calls. So let's just sell a put. That's about 4% return for the week, I believe. And then what is this CLSK nonsense? Oh yeah, I was demonstrating selling a put credit spread here. So this will just sit here. No, I'm sorry, not a put credit spread. I bought a call debit spread for 30 bucks. And if it gets to being worth 60 bucks, then I'll double my money. So who knows how long this will take, but it has to happen in the next 200 days for me to make a profit. So with the 500 bucks that I just collected, where are the long calls that I have in this account? I got the February 21st ones. Oh, still on my SCLSK. All right, so let's take that 500 bucks and buy one more. And keep the other 200. All right, that's it for the joint account. The 5K account. I already rolled this Riot call with my son. He's got 100 shares of Riot and 100, actually, and I think he sold one put in that CLSK. So that's why that's done. All right, so this CLSK 13.5 strike. Buy this back for $1. And let's sell another covered call for next week. For these mining stocks, I generally like to build about $1, or excuse me, 10% worth of call away value in. So I'll probably want to go to 1250 here. Let's see if I can get a fill for the mid price. There's 200 of us bidding 13. Oh, I'm sorry. Do I have that backwards? Let me just sell for the 13. Done. All right. I got 100 shares of Hut. I got the $13 call. So let's close this for $3. And view all options for next week. I'm going to see what I can get for $1 worth of callaway value. What can I get for? Okay, for 1250, there's no liquidity whatsoever. But I can get 13 potentially at 13. Or I can be a little greedier and go with the 12. Again, I do not know what happened to the liquidity on Hut, but it is terrible right now. So a 10-cent bid-ask spread on a 30-cent contract is not great. So I really wouldn't even be mad if this gets called away. Let's see what my cost basis is. So my cost basis says 7. I don't know how accurate that is because I probably had to roll a bunch of times on the way up. But some people are super paranoid about selling below their cost basis. But I generally don't worry about it too much. All right, that got filled. If these get called away, I'll just let them get called away. I can't stand shit liquidity on options. All right, I've got 6 of these. So I'll buy 6 of these back for $1 each. And I already sold one of these with my son. Let's see what strike we picked. We went with the 8.5. And I think that's reasonable. That's about 70 cents in call value, which is almost 10%. So I'm going to do 6 more of these. Let's see if they'll fill me at the mid price. Boom. Thank you. All right, I don't have any more options expiring today. Let's just double check and make sure I did everything I needed to do. 100 shares of Hut. I have one covered call against Hut. I have 100 shares of CLSK. I have one covered call on CLSK. I got 700 shares of Riot, and I got 7 covered calls on Riot. I don't really like the fact that I have so much in Hut compared to these others. But for now, let's see, do I want to sell any new puts on margin. You know what? My son did one in CLSK, so let's just copy trade the man. He might have had the 11.5. I don't know. Let's try to sell the 11. Of course, they're going to milk me for $1. Wait, let's try 32. Did I try 32 last time or 33 last time? 32 should frickin' fill. Somebody from... There we go. Thank Lord. Oh, maybe that's why I didn't... did my buyback really disappear that quick? I thought I had 4,000 in buying power, and now it went to 500 in buying power. Well, that's annoying as shit. Let me peel off one of these Riot covered calls. All right. I just opened it, but now I'm going to close it. And let's sell 100 shares of Riot. Okay. Let's see if that gives me a little bit more breathing room on buying power. I don't know how they do their damn calculations, but you know, it was telling me I had 4,000 in buying power. I sell one put in CLSK, which should only obligate 1,100, and then it took my buying power down from 4,000 to 500. So, maybe that's why Robinhood's for rookies. All right, that should cover it, except this Misty strike was just for shits and giggles. So I'm just going to sell my single share of MSTY. That was kind of just for demo purposes. The fact that they have a management fee means it's probably not worth holding. Except that in this account, I could actually afford 100 shares of it. I mean, I could just load up on it, really. I mean, to be honest, I could, you know what? What's the cheapest? Oh, yeah, I have one. I can actually afford MSTR leaps here. I forgot about that. So I bought one for 500. And how much did I collect? So I collected 35, 50, 85. 6 times 10 is 60, 145. Collected about 145. Let's see, Tesla's up, but that's break even. So that's not worth it. But I did sell off 100 shares of Riot. So let's dollar cost average into this. Let's buy one more MSTR call for 365. Boom. Okay. Let's see what that did to my buying power. Damn. That kind of wrecked me. All right, well. Oh, you know what? I can, yeah, if I have to. If I have to, I can sell off one of these MicroStrategy shares. That's fine. All right, leave it there. And that's all the accounts for today. Be good, y'all.